Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news of growth and calmer markets. Firstly, in the US, data out overnight shows that inflation rose faster than expected in January, stoking expectations that interest rate rises will accelerate this year. Their CPI rose 2.1% versus expectations of a 1.9% rise. The rises are widespread, other than for food and cars. Earlier this month, jobs data showed accelerating wage growth, and that triggered the equity and bond market volatility over the past 10 days. After today's data release, however, the US dollar fell and the benchmark bond yields rose, but the equity markets have taken the news more calmly. In fact, the S&P 500 is now up 1% in midday trade. Markets are accepting that the Fed will push ahead with its rate hike normalisation, and that bond prices will fall, and that life will go on. In Washington, however, a top intelligence agency boss has told lawmakers that the US government debt levels are a major security risk, one able to be exploited by rivals. But few lawmakers or administration officials are listening. Japan is also reporting good, if modest, economic growth. That run now extends to 8 straight quarters, the longest streak since its heyday in the late 1980s. Growth was 1.7% for all of 2017. Analysts generally expect that modest expansion will continue this year. In India, fraud at a major regional bank is causing jitters in their banking system. The scandal at the state-owned bank risks drying up the very loans that are needed for the country's small to medium-sized businesses to help steer the national government's ambitious growth programs. Meanwhile, the EU grew at its fastest rate in a decade. That's what data out overnight confirms. This growth was broadly based across most countries, led by Germany, France and Spain, but Eastern Europe countries also caught up a little faster. Only the UK posted an annual growth rate below 2%. In Australia, regulator APRA has signalled that banks will have to hold more capital against higher risk property loans. This is a position that will be much tougher for smaller banks to accept than any of the majors. In New York, the US Treasury 10-year yield has resumed its rising trend and is now over 2.91% following that US CPI data, and it's its highest level since January 2014. Measures of market volatility have settled back further today. The gold price, however, has jumped $23 today. This morning it's now at $1,350 an ounce. Oil prices are up marginally, with the US benchmark now just under $59.50 a barrel, while the Brent benchmark is just over $63 a barrel. This morning the Kiwi dollar is up nearly half a cent again at 73.3 US cents. On the cross rates we're higher too at 93.1 Aussie cents and 59.2 Euro cents. That puts the TWI up at 74.3, but still within its 2018 range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.